And good evening, everybody. I'm Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, June 9th, 2021. We don't have a lot to be adding to our current analysis, but just to do a quick review, we remain in the process of tracing out a small wave 2 correction as a part of an ongoing 5-wave advance off of the low from last Thursday at 4,165.25. Our expectations are that this move will move to new highs and likely before complete, hopefully get up around 4,300 or possibly even higher. We continue to have a lot of hesitation, a lot of stopping as we get up towards that high level, which is at 4,238. And we did the same thing today as basically we did yesterday, in that we reached the high early in the session, and then the market sold off. And then it rallied into the close, but it sold off. Today, early in the session, we reached the session highs and the market sold off, reaching the lows at the close versus rallying off of those. But the picture remains the same in that it's corrective, and that we're looking for continuation for the C wave to move down to first support actually for it at 4,209, and at 4,210 to 11 sits the 200-day moving average. That's going to provide some support. And then we have stronger support just below at 4,200. A, because it's the round number. B, because it does put in the new low below where wave A came down to 4,205.75. So that would put the icing on the cake, so to speak, because then the C wave would indeed have put in a new low below wave A. And that's what I'm always going to be expecting. So 4,200 really sits a lot nicer to put this in a nice, neat package, wrap it with a bow, and send it on its way. So, because what I'm expecting after that would be for the advance to pick up, and it's going to be picking up in a wave 3. So no matter what position it's in, it's a wave 3 going up in this particular case. Not a very large wave 3, but it is still going to follow the characteristics of a wave 3, which is that it's powerful, it's strong, and it moves quick. We're looking for that to the upside. So it needs to pick up the pace, and I would hope from its current levels, even if it gets down to 4,200, that it shouldn't have a whole lot of problems tacking $38 onto a rally saying that 4,200 holds. Tacking on $38 is going to be such a problem. But right now, it's like, no, there's no interest in really pushing it. They come in, they do the business, they walk away. So we've got to wait for the next line of buyers. So this market has now been sitting since last Friday and getting itself together as to what's the next move. And so it's sitting basically still in a range somewhere. The range is the highs down to 4,200. So it's got a $38 range that's now been holding on for several days. I'm looking for that range to break. And my expectation is that it's going to break to the upside and finish this rally and finish the larger moves that it needs to finish before we get a larger, more extensive, in terms of depth, correction. And so for tomorrow, I'm looking for continued downside. Should not be too severe. I mean, what are we looking at? Max here, we're looking at 13 to 23, 22 points. That's not massive. In fact, we've seen, of course, larger moves. Right now, they're kind of just ticking around at the upside, but not really getting anywhere. I'm looking for that move and then to have a little bit of some upside action. Now, being that we seem to be operating under pretty light volume today, if that now continues through tomorrow, we're going to have to let the market do what the market does and still continues to look for the move. Okay, so signals are, of course, that volume is going to increase no matter what. And when it does, we'll probably get our move down. And then the volume should still increase as the buyers return and push. So we need to see volume increase too to get all this done. And that's when we're going to leave it. Upside, we know where we have limitations, and we've got resistance all the way up, and we've got resistance at now 42, 35, 36, 37, and 38. And then once we get above that, we have it up there at 42, 43 to 45. So we've got resistance pockets going to fight it all the way. And one would expect, if we're feeling that the market is reaching the top, there are going to be a lot of people waiting in line to go like, well, yeah, maybe I'll just get out of some assets here, or maybe I'll shed some of the holdings here, et cetera, et cetera. Plus, we have the end of the second quarter coming up. So we've got a lot of activity that's going to involve the position squaring. What do we keep? What do we dump? Myriad of things. We just need to be prepared, and then we need to trade what's in front of us. So if it's a sudden downdraft, fine, trade it. Have fun, make some money. If it's the updraft that we're looking for, great, trade it, make money. Follow your moving averages and follow your Elliott wave, follow the Fibonacci. They are the guides. They are the guides, and they will continue to lead us even on that intraday basis where we're using a 1, a 2, and a 5-minute chart. They're still going to guide you. They're still going to help us to light the way so that we can trade smart, trade well, and make profit. I'm going to leave it there. The next update will be Thursday, June 10th.